What if I've told you that you could own a property worth millions and it won't affect your personal credit? Sounds amazing, doesn't it? That's the power of commercial real estate financing, and today I'm going to explain how it can work for you. If you are new to my channel, my name is Oberoi and I'm a real estate agent, investor, and a serial entrepreneur. I went from working as a server to owning multi-million dollar worth of real estate portfolio in just 8 years. In my career, I have helped hundreds of my clients buy over 900 million worth of real estate using tried and tested strategies, and I am here to share those tips with you on this channel. Today we are going to talk about very important topic, mortgage financing in commercial real estate. Whether you are just starting out or thinking of moving from residential to commercial properties, this video will help you to understand how commercial financing works. I know commercial real estate might seem complicated, but don't worry, it's actually simpler than it looks. And I'm going to explain you step by step how it works. Benefits of commercial mortgages. Alright guys, before we talk about the challenges, let's first look at why commercial mortgages are such a big deal. In residential real estate, lenders usually focus on your personal income. This can limit how much money you can borrow, and it might even affect your credit score. But with commercial mortgages, it's different. The main thing that lenders look at the property is its income. In other words, how much that property can earn from the rent, not how much you earn personally. Commercial loans don't even show up on your personal credit report. This means you can keep growing your investment portfolio without worrying about your credit score being impacted. Sounds great, right? Higher down payments. While commercial mortgages offer many benefits, one of the main challenge investors face is the need of a larger down payments. This can discourage some investors from investing in commercial real estate, especially in a high-cost areas like Vancouver and Surrey. For example, imagine you're considering a $4.4 million property that generates about $10,000 in rent each month. It seems promising, but the high down payment requirement could still be a hurdle for many investors. Remember, lenders want to make sure that the property can pay for the loan. So they use something called debt coverage ratio. In other words, we call it DCR. Think of it as a bank's safety measure. If the DCR is 1.2, the bank will divide your rental income, which is $10,000, by 1.2. This lowers the safe rent amount to $8,700 to $8,800. This lower number affects how much you can borrow. So instead of getting a higher loan, you might only qualify for about 1.6 million. This means you need to put down around 2.8 million or 64% of the property price. Strategies to get better financing terms. So how do you lower that big down payment or get better loan terms? Let me share some smart strategies that experienced investors use. Strategy 1. Use your business as a guarantor. What if I told you that your business could help you to secure better financing? If you own a company with strong finances, you can use it as a guarantor to improve your loan to value ratio. This could allow you to borrow up to 85% of the property value. So instead of needing to put 2.8 million as a down payment for $4.4 million property, you might only need $660,000. That's a huge difference. Strategy 2. 100% financing for professionals. Are you a doctor or dentist? If so, you might qualify for 100% financing, meaning no down payment at all. Banks sees these professionals as low risk because of their stable income. For example, I recently helped a group of doctors get 100% financing for a $6 million office building in Langley. It made a huge difference for them. Strategy 3. 100% financing for business owners. Now you might be thinking, I'm not a doctor, so can I get 100% financing? The answer is yes. I got it as well, my own office in White Rock with 100% financed, and I'm not a doctor. The key is that if you own a business and plan to use the property for your own company, even if you only use 25% of the space, you might still qualify for full financing, which is 100% financing. For example, let's say you're buying a 10,000 square feet building, and even if you plan to just use 2,500 square feet of your business, banks see this as a safe investment, as they may cover the entire loan amount from the rents coming from the remaining leasable space. This means you wouldn't need to put a big down payment upfront. It's a great way for a business owners like you to expand without spending too much money out of your pocket. Strategy 4. Look for higher cap rate markets. Now you might be thinking, I'm not a business owner, not a doctor. Can my down payment still be smaller? The answer is yes. What if I told you that you could find a better financing option by focusing on properties with a higher cap rates? These properties typically generate more income compared to the purchase prices, making it easier for secure, favorable financing terms. Higher cap rates can lower your required down payment. The key is to seek out emerging markets, areas that could grow into next big thing, the next Vancouver or next Surrey. You don't need a lot of money or special skills. You just need to be smart about where to invest. As an example, I have helped investors find deals outside this expensive area of Lower Mainland where they only have to put 25% down instead of 64% down, as we discussed earlier. because these areas offered higher cap rates or rents. Cities like Kamloops, Kelowna, Penticton, and there's so many other cities on Vancouver Island. So in summary, commercial real estate financing may seem challenging, but it doesn't have to be. Remember, what really matters is the income the property can generate, not your personal finances. With the right strategies and a clear understanding of what lenders are looking for, you can secure better loan terms and grow your investment portfolio faster than you might think. I hope these tips help you with your commercial mortgages. I would love to hear about your experiences with financing in commercial real estate, what challenges you have faced, or what successes you have had. Please share in comments below. If you found this video helpful, give us a thumbs up and share it with someone who's interested in commercial real estate. Also, check out my video about triple net investing. If you wanted to learn more about passive income, that's a video to watch. Remember, knowledge is your best tool in this journey. Until next time, happy investing. Take care.